So I'm outside the Bank of England. They've just made their big decision on interest rates. Here is everything you need to know in just 1 minute, because it's pouring with rain and you're busy, so I won't take too long. Starting now. So they've just cut interest rates down from 4% to 3.75%. It was broadly expected, so most people thought this was what they were going to do. It's going to have an impact. If you've got a mortgage, floating rate mortgage, you should see that reflected soon. Also, if you're a saver, it's going to be lower savings rates. Two interesting things about this. First of all, the vote wasn't as clear-cut as thought people might have expected. So they've got a 9-member committee deciding on these things. 5 of them voted for a cut. 4 of them said no cut. So it's quite fine, and that kind of has implications because it raises questions about when the next cut is going to be. Still, most people think there'll be another cut, but when that's going to be, don't know. Second interesting thing, the bank now thinks inflation, which is the key thing it needs to target, needs to keep it close to 2%. It's currently 3.2%. It thinks inflation is going to get down towards that 2% target much sooner than expected, by next year, not the year after, and that is thanks in part to the Chancellor and the budget, so she will be very happy about that. So Christmas cheer for the Chancellor and Christmas cheer for mortgage holders as well.
That's 6 cuts we've had in a year and a half. The rate of interest, the base rate down to 3.75%. There are winners and losers from this. The winners are obviously those on variable rate mortgages who will see an immediate benefit to their mortgage payments, depending on how big they are. Those taking out a new fixed rate mortgage, they will also see rates come down. We've seen that come through already. The majority of people who are on fixed rates, well, they'll have to wait until they change rates. That depends on when they decided to fix. The losers, obviously those with big savings who have seen a significant cut in that rate of interest over the past year and a half. And that's not an accident, it's almost by design. Savings rates have been very high, kind of uncharacteristically high, the sort of heights we saw during the pandemic as consumers have been cautious. And so this is designed to sort of give them a bit of a jolt, get out there spending a bit, let's see if it does. Also to get business confidence going, because lower borrowing rates means a greater incentive to invest. So that is the dilemma now. This reflects not just the idea that inflation has peaked, partly because of some things in the budget and because inflation generally has been falling, but also the fact that the economy is a little weaker with perhaps no growth at all in the current quarter. The animal spirits for consumers and businesses required for a feel-good factor that lasts beyond Christmas from next year.